It's Monday morning for markets, and we are already knee-deep in portfolio moving news. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. Let's get right into it. Here's what's on my market mind right now. Losing that shine and losing that hype, we are witnessing some major moves in precious metals, much to the dismay of the bulls that push prices to nosebleed levels for most of January. Gold prices are down slightly after tanking as much as 10% earlier today. Gold had seen its biggest slump in more than a decade on Friday. Silver had tanked as much as 16% earlier today, but has also recovered a bit. Kevin Warsh being nominated to take over as Fed chair appears to be the triggering moment for these crowded trades. The vibe on Bitcoin isn't any better. After a weekend of selling pressure, Bitcoin bulls over at Bernstein say Bitcoin could bottom out at 60,000 before climbing higher again. And when a billionaire combines their empires, the world's richest person, Elon Musk, is reportedly in advanced talks to combine SpaceX and xAI. A merger would bring together Musk's cash-burning startup and space leader SpaceX. SpaceX makes the rockets and satellites that Musk needs to potentially enable his vision of putting data centers in space to do complex AI computing. Just wild to even think of that. SpaceX is the world's most valuable private company with an estimated valuation of $850 billion, according to Yahoo Finance private company data. xAI clocks in with an estimated valuation of $250 billion. I know what you were thinking here, friends. How does all this impact my Tesla holdings? Very simple, at least I think so. It could create more of an AI software powerhouse, and that would help Musk to move quicker with robo-taxi and robot rollouts over at Tesla. Just connecting all the dots in real time. And a new era at two of the world's largest retailers begins today. Today is officially day one for new Walmart CEO John Ferre and new Target CEO Michael Fidelki. Both of these two gents have different backgrounds and a different set of challenges over the next 6 months to tackle. John Ferre began his career at Walmart in 1993 as an hourly associate working in the Garden Center. Prior to taking over as CEO, Ferre ran Walmart US. His biggest challenge is this: keep growth humming against the backdrop of sky-high Wall Street expectations. As for Fidelki, he joined Target in 2003 as a finance intern. Before taking over as CEO, he was the CFO and COO. Fidelki has a host of challenges on his plate. For one, he has to fix Target's awful sales performance. And two, he has to figure out how to thread the needle as a new CEO amidst considerable unrest in Target's backyard of Minnesota. Not going to be easy for Fidelki here. Here in my opening bid roundtable, Tom Essaye, Seven Support Research founder, alongside Yahoo Finance senior reporters Brook, DiPalma, and Ines Ferre. Tom, coming over to you here, your thoughts on these moves in precious metals. Feels like I just talked to you and prices were going sky high. Now they're completely collapsing.
Good morning, Brian. Thank you very much for having me on. Yeah, I mean, the dam broke to a point, right? I mean, I think anybody could realize that the parabolic moves we were seeing, last week and then really for most of this month were not sustainable, okay? And it was going to take some sort of a catalyst to reverse it. And when it reversed, it was going to tumble. That's the way metals are. That's what everybody has to understand if you're going to trade them. The catalyst always seems to be a surprise, and it was last week, with Warsh being nominated as the Fed chair. Now, he isn't hawkish by any means, but he does have some unknowns attached to him regarding QE and sort of Fed staffing. And that was the catalyst we needed. The dollar firmed, and all these weak late hands in gold and silver ran for the exits, and then down it goes.
Tom, you know me, I still love my investing jargon, so I'm going to dip into my bag of tricks here. Do you try to catch a falling knife in gold and silver here?
No, I don't think so. I think you can wait a little bit longer. I mean, in the end, these things got very stretched. I mean, the moves, especially in silver last week, I mean, they were truly sort of historic. And I've been watching silver for 20 plus years. I think that there's more froth to come out of this. I think at some point, certainly they will be interesting, but I think you can be a little bit patient. The best way to do it is if you're itching, just buy a little, right? Then let it come in, buy a little more, and kind of build a position over time. That way you're not trying to pick a spot, catch a knife on a very volatile asset.
Ines, I learn something new every day in markets. Today I learned that the Chinese call silver the devil's metal. I had no idea about that, but wow, you've been covering this move all the way higher in these metals, and now you're covering them on the way down.
Yeah, and a dramatic way down, and especially when you take a look at gold, which is such a large, has such a large market cap, and the dramatic fall that we saw in both of them. But as Tom was saying, yes, it was a parabolic move, and there were plenty also of strategists that were warning about that parabolic parabolic move. I will say, though, JP Morgan came out with a note just yesterday, basically saying, stay the course on gold, looking at gold.
Oh, of course. They're coming out with that crap, Ines. I mean, of course.
Yeah, they're coming out with a year-end price target of 6,300 for gold, basically saying central bank demand, investor demand for gold. On silver, they're actually saying that the price floor, they see it between 75 and 80. So they don't see silver pulling back as much or losing all of its gains that it's made. But silver certainly has been the one that has been most parabolic out of those two.
I'm glad you mentioned that, Ines, because Deutsche Bank out this morning staying true to their $6,000 an ounce call on gold. Always interesting to see that. And Brook, following Bitcoin, I mentioned at the top of the show that the team over at Bernstein, I mean, they have been major Bitcoin bulls. They think this could bottom out Bitcoin at $60,000. But again, at the same time, is gold and silver under pressure? Cryptocurrencies really under a lot of pressure as well.
Yeah, cryptocurrency certainly falling to some of the historic lows that we've seen over the past year. Crypto now hovering around 80,000 for the first time essentially since April. And largely we see sort of investors backing off this risk-on sentiment sort of play here of cryptocurrency as we make our way into what was or what is sort of a volatile week to kick off this week, another big week of earnings after we got some major tech names last week that really led to a bit of a slide in the market over Thursday and Friday. And now what we're seeing is that this cryptocurrency falling, Bitcoin down around 80,000, now currently, as you can see on your screen, hovering around 78,000. And we haven't seen these lows since April of last year. And that's really telling. I mean, just a few months ago, we were talking about Bitcoin crossing a record high of $126,000. And now to see it back off that significantly is definitely worth taking note of. And many saying that this could sort of hover around these areas for quite some time.
Tom, I could make a case for one, like you just mentioned, nibbling a little bit at the sell-off on gold and silver, but crypto, especially Bitcoin, I don't see the near-term catalyst. Even if that Clarity Act passes, I don't think that opens the floodgate for crypto to hit back, over 125,000? Was that the record high last year?
Yeah, I actually agree with you. I think that, look, Bitcoin's falling for the same reason that gold and silver are falling. It's kind of all the same trade, right? Think of it like kind of air coming out of a balloon. These are all sort of destinations for speculative capital, and it's worked, and now it's not, and now the capital's fleeing. I agree. I think that the sort of the fundamental backdrop for gold and silver remains very much in place. They got extended, now they have to come in, but the sort of medium-term outlook is still bullish due to fundamentals. Bitcoin, I feel like we've packed in a ton of really positive news that everybody's been waiting for in 2025, and you got to move. But now everybody's looking around saying, what's next? And I agree with you. I don't see what the good answer is. So I think that there could be some more pain in Bitcoin compared to sort of gold and silver.
All right, outside of crypto and gold and various metals, I'm tracking Tesla, in large part because of this news that Elon Musk may combine xAI and SpaceX. And now, first blush, you think, well, what the hell does that have to do with Tesla? Like I mentioned in the open, it could have real big ramifications on how fast Tesla can move in really updating its software and staying ahead of so many rivals. At least that's my hot take here today.
Yeah, I mean, it is bringing so much under an umbrella if that merger it does go through. And because it would be intersection of aerospace, AI, data centers. I mean, Elon Musk in Davos was talking about putting AI data centers in space. Energy, solar. He's talked about how solar is underappreciated and the sun is the source of energy. So this would be so huge with respect to that intersection of all of those plays. And for Tesla holders, I mean, their bet is on Elon Musk, and Elon Musk has been the bet across all of these companies, really.
Tom, are you all in on Elon Musk? I could make a case that eventually SpaceX and xAI just get rolled up into Tesla. It's one big, giant, modern recreation of a General Electric, dare I say. Yeah,
Musk Inc., right? I mean, it sort of makes sense if you think about it, because if you're an investor in Tesla, you're not investing in it for the cars. You're investing in it for robo-taxis, for the future, for technology. So the two kind of leading edge technology companies that he has under his broad umbrella are xAI and SpaceX. And I think it does make sense to roll them up. Now, they're private companies and Tesla is a public company. So this is going to have impacts on share dilution. It's going to have to be approved by the shareholders. So it gets a little complicated merging, private with public. But over the longer term, I think it does make sense, because if you are bullish on Tesla, you're bullish on the technology. It's a technology company. Why not roll these two up and have them all working together?
Brooke, over to you on this Walmart and Target news. Two young fellows, relatively speaking, now leading Walmart and Target, and both of their investment theses are wildly different. I mean, John Ferre takes over a company just rocking. Walmart doing very well in the top bottom lines. Target, the completely different story.
Brian, that's right. They're stepping into two very different big box retailers here. Michael Fidelki stepping into Target here after consecutive quarters of same-store sales really being flat, really underperforming Wall Street's high expectations that they once had for the company. But really after 2023, Target has struggled to find its footing and its stance as the once known as Target, that experiential retailer that really hooked and captivated consumers with their right price point and the feeling and allure of an experiential shopping as soon as you went in there. And now what we've seen in recent years, which is what exactly John Ferre is stepping into, and a big part of what he's built within the U.S. business at Walmart, is this go-to for high-income shoppers, for middle and low-income shoppers, to find that right low price point. Also, the look and the feel of stores are dramatically different. And on top of that, too, Walmart has really been able to build out a robust delivery, convenience, and also Walmart Connect, the retail media business, has also done really well. But just quickly as well on Target is keep in mind, Michael Fidelki has had this experience as a CCO, or rather COO, and he really brings in sort of this focus on tech. And so don't discount Target necessarily, because I think that Fidelki will really try to innovate Target quite quickly, and we're already seeing that underway.
Tom, over to you. Last word. Do you bet on the comeback kid in Target, or you just stay with a company that's absolutely crushing it like Walmart?
I stay with the company that's absolutely crushing it. We've been waiting for Target to turn around for a long time, it seems like, and it's just not working. I think Walmart is taking a bit of a gamble by going more into the tech, more into the delivery, really competing with Amazon. That's a big boy to compete with, but Walmart can do it. I think they have a lot of momentum. I think they are the new Target, and they're executing on that strategy.
I just need Target to have a better fish selection. Maybe even me too. That's all I need from Target. And when they do that, I know that Fidelki's turnaround is starting to gain steam. Sometimes analysis is that simple. Big thanks to the opening bid roundtable. Really appreciate it, guys. A big moment today in the long history of regional bank, Fifth Third Bancorp. It is closed on its $10.9 billion deal for Comerica. I have Fifth Third Bancorp CEO Tim Spence in the seat for my Power Player segment. That's next. Fifth Third Bancorp could trace its roots back to 1858 in Ohio. Just think about what this bank has managed through since then. The rise of the car, the Great Depression, world wars, the internet bubble, and then the internet bust, the great financial crisis, a host of Federal Reserve chairs. But now the bank is about to make a little history of its own. Today, Fifth Third closed on its $10.9 billion acquisition of Comerica, which was previously announced back in October. Fifth Third has signaled to Wall Street it can yank out $850 million in expense savings over time. This as the bank makes a bigger push, I should say, into Texas and California for retail deposits, commercial business, and wealth management clients. Fifth Third Bancorp Chairman and CEO Tim Spence is here for my Power Player segment. Tim, good to see you. It has been a while. Big acquisition, big deal by you. What's the big push here, and what's your big vision for this combined company?
Yeah, thanks, Brian. Based on your last segment, I'm hoping that you can characterize this as both the regional bank that's absolutely crushing it and the comeback kid. So, I mean, the big push here, now that we are at a point where we are one company, is to operate like one company. We did really nice progress as recently as over the weekend. We converted Comerica's swap dealer, so their capital markets platform is trading on Fifth Third's platform as of this morning. Comerica got all Comerica clients now benefit from a one-notch upgrade since Fifth Third's credit rating was one notch higher, which will be helpful in everything for the market for letters of credit, investment policies and corporate deposit gathering. And then I think in a even more exciting from my perspective, Comerica and Fifth Third client-facing bankers are going to be able to go to market today with a much broader range of capabilities. So lending products that the Comerica folks didn't have, vertical specialties that the Fifth Third folks didn't have, and within 2 weeks, more than 1 million pieces of mail dropping on what will be probably 14 to 15 million direct marketing outreaches for the remainder of this year in Comerica's footprint in Texas and Arizona and California. So big day for everybody here. I'm just excited to get to go on offense.
Tim, color me old school a little bit, but I love that you're opening up bank branches. And you just mentioned it. You're really focusing on Texas, like Dallas and Houston. Why is that the case? And why are you still opening up bank branches in the age of digital?
Yeah. Listen, on a combined basis, as of this morning, Fifth Third and Comerica have a presence in 17 of the 20 fastest growing metro areas in the country. So we've incredible footprint that we're going to be able to grow into. Fifth Third's had great success in what I think of as a three-legged stool in the Southeast. So the combination of bank branches built in the right locations, award-winning technology products. So Fifth Third's mobile app won the J.D. Power Award for regional bank mobile app this past year, and then really strong direct marketing and client service, which is analytically driven in both direct mail and digital channels. So it'll be the same playbook across the Southeast. The Texas markets are unique because they're among the fastest growing in the U.S. and among the largest markets. And Comerica had a really excellent beachhead there, had not had the opportunity to invest in the branch infrastructure over the course of the past several years. And we have a proven playbook. Our branches, the new branches we've opened across the Southeast, are generating on average 50% more deposits than our peers' branches are within the first 3 years that they're open. So I think it'd be blue sky for us in the state of Texas.
Tim, over the past 5 years, I've heard so much about the need for regional banks to consolidate. One bank needs to buy another, but I would say this deal was one of the first of what could be more to come. Do you see more regional banks consolidating this year? And if so, why?
Yeah, I mean, that's a great question. I think people have forecasted the consolidation of the banking sector for a lot of years based on, I think, a couple of simple facts. One, the banking business is the least consolidated sector in the U.S., and it's the least consolidated banking sector in the world. The U.S. banking sector is. So it does make sense that over time you'll see this continuation of the trend that started with the rollback of the interstate banking bans to fewer banks. That said, I don't think it just has to be through consolidation. Like, one of the things I'm most proud of is that Fifth Third has been able to generate GDP plus organic growth over the course of the past several years. Like, if you just look at where we're going to be at the end of 2026, between the organic growth we've been able to generate and the addition of Comerica and in 2019 MB Financial, like, the bank is going to have basically doubled its total assets and its return on tangible common equity since 2016. So it's been a nice story of, nominal GDP plus growth on the top line and a very significant increase in profitability, a return on tangible common equity from 10.5 to, we're saying we'll get to north of 19%. In the fourth quarter of 2026.
I'm sure you've had some time to digest this news of a nomination for Kevin Warsh to succeed Jerome Powell as Fed chair. Warsh has not hidden his fact that he wants to remake how the Federal Reserve operates. How would a remake of the Federal Reserve impact a bank like yours?
Yeah, I mean, I'm going to leave the prognostication on policy to the experts here. What I do think, though, is quite encouraging is I think the nominee for Fed chair has been clear that he believes that the Fed has a very significant role to play in monetary policy, but that fiscal policy needs to be the purview of politicians. I think one of the greatest threats to not just the banking sector, but to the U.S. economy in general is the fact that we've run these structural deficits for a very long time. And to the extent that we are in an environment where we're going to get a productivity lift from AI, and that means we can maybe have lower rates on the front end of the curve, but also some steepness to the curve as the Fed winds down its balance sheet. Like, that's a pretty golden environment for banks. Rates above absolute, at absolute levels above zero on the front end, and some steepness to the curve would be awesome for our industry.
You've spoken a lot, Tim, in the past about cryptocurrency and its rise and importance. How much of a threat is crypto to the banking system at this point in its life? And I imagine it's going to get more important should that Clarity Act finally pass.
Yeah, I mean, I'm quite hopeful that we get the Clarity Act as a complement to the Genius Act earlier. Like you said, I'm a big believer that you wake up every morning when you have a new technology and you can choose to be excited or afraid. And our belief at Fifth Third is that we're better off when we embrace new technologies. So we have been very bullish, in particular on stablecoins and the role that stablecoins can play as a payment rail. I think in terms of the threat to the banking sector, it really comes down to whether we recognize that if it looks like a bank and it acts like a bank, it needs to be regulated like a bank, right? And the concerns that the sector has expressed over whether it's special purpose charters or the degree to which some of the crypto companies are openly attempting to circumvent the principles that were behind the Genius Act in the way that they operate without having to be regulated like banks, that's where the issue becomes. We're prepared to compete with anybody. It just has to be on a level playing field.
Tim, I can't tell if you're on Team Jamie Dimon or Team Brian Armstrong.
I am on Team Fifth Third.
Okay.
I've tried to be very clear about that. I represent our employees, our customers, the markets we serve.
Tim, good luck on this acquisition. Good to see you again, man. It's been a while. I know you got a lot of work in front of you. We'll look forward to following that progress.
Yeah, thanks, Brian.
All right, appreciate it. All right, yearning for more Opening Bid? I know you are, so be sure to check out a new drop of my Opening Bid Unfiltered podcast today. Now, I thought I created an insane amount of content each week. I do. But you know who's putting me to shame on the content creation output front? The new AI avatars created by Inception Point AI, a fascinating team churning out, get this, 3,000 podcasts a week. Yes, 3,000 podcasts a week. They range from 25-minute podcasts on the history of the British monarchy to 30 minutes on hot personal finance topics. Creating these episodes costs $1 in most cases, and they are developed by Inception Point AI. They're using AI to study hot topics deep in the internet. The avatars were then deployed to assignments just like us humans. I sat down with Inception Point AI co-founder Janine Wright in this new drop, who led Amazon's Wondery podcast business. You can give this one a watch on Yahoo Finance or YouTube, or listen in on Spotify, Apple Music, or Amazon. We'll be right back.